let's start with you and what you're doing in Beirut with Apstrata, because this is fascinating. Tell me more.
Sure. So we are a cloud platform. We're based out of New York and Beirut.
Yeah.
We have under the group several brands. There's Apstrata and there's Scripter. With Apstrata, we help mobile operators to integrate into the app and API economy. That includes also IoT. And with Scripter, we partner with device manufacturers.
Can you hold the microphone a bit closer?
Yeah. So with Scripter, we partner with IoT platforms, device manufacturers like ARM or Marvell Semiconductor, etc. These count among our customers. They use our platform as the back end for some of their products.
And what happens in Beirut and what happens in New York?
The kitchen is in Beirut.
Okay.
Everything else is in the United States or here in the Gulf. Some activity in Europe also.
And where's your money coming from? Where are your clients?
The clients are, so we're targeting semiconductor technology companies in the US and mobile operators in the emerging world.
Okay, great.
So we make money from both sides.
Could you give me an example of clients, or you could tell me, but then you'd have to shoot me.
Sure. Here in the UAE, we have Do. Do counts one of our customers. If you check the URL developer.do.ae, that's powered by our platform, and that's their developer offering. It's a cloud service for developers creating mobile apps or IoT applications, etc.
Great stuff.
And in the US, Marvell Semiconductor, Interdigital, etc. All technology companies.
Paul, let me turn to you and ask you the same question. And it's a similar answer because you're not based in one place, you're based in multiple places.
That's right. So what we do at Crowd Valley is we provide an infrastructure platform on which our customers can build financial technology applications. So the applications are things like crowdfunding platforms, peer-to-peer lending platforms, wealth management platforms. Our business is based in San Francisco, headquartered there, but we have offices in London and Hong Kong as well. And our customers all over the world, including the Gulf area as well. So it was interesting for me to be here and to learn more about the kind of financial investment ecosystem here.
So you've got clients here?
Yeah.
Can you tell me who they are?
Well, there's one very interesting group called Gulf Wealth Management Holdings, which is actually based in Bahrain, and they have offices in the UK as well. And they're doing a kind of online wealth management application. And in the past, we've had interesting applications around kind of early stage crowdfunding and peer-to-peer lending, both in this area and elsewhere in the world as well.
So you build the systems for them in many ways?
Exactly. We sort of provide the back-end infrastructure and back-office services that allows them to put together their own application.
So it's interesting, when you look at your pipeline of new business, where do you see that coming from? Is it coming from the Middle East and Asia, Europe, or the United States, the balance between those geographical areas? And then the other side is perhaps funding that you need if you look at investors to grow your business. Where's that pipeline?
It's interesting, especially in the sort of crowdfunding sector and equity crowdfunding in particular. It's very much driven by regulatory change. One of the reason that we wanted to found the company in the US was because the US government released something called the Jobs Act in 2012, which for the first time allowed private companies to market their securities to unaccredited investors. And if we look at our sort of customer base around the world, it has really been driven by regulatory innovation. So places like the US and the UK, which were very early in this sector, but also places like Southeast Asia, places like Vietnam and Malaysia and Singapore, where the Securities and Exchange Commissions of those areas have been really on the forefront of trying to allow the investment process to catch up with the online world that we're in now.
So is it a profitable business? We're looking at the investment opportunities from IoT. Is this a speculative opportunity, or is it a business model with proof of concept?
It might be helpful to just sort of lay out the different types of online finance applications as well, so we have a bit of structure. There are sort of 3 or perhaps 4 different types of these kind of finance applications, especially thinking about crowdfunding. You have the very early stage rewards, kind of donations-based sites like Kickstarter and Indiegogo that you may have heard of. And some IoT companies have been very, very successful on that front. So you may have come across the Pebble Watch, for example, which was one of the poster boys of rewards crowdfunding on Kickstarter. It raised something like $10 million back in 2012 or so. On the same site, Kickstarter, there have been other companies like LifeX, a smart bulbs company, which raised $1.2 million. Another one called Smart Things, which raised $0.9 million. So this is serious capital already. That's the rewards kind of crowdfundings, reward donation crowdfunding sites. Then moving slightly higher up the financing chain, you've got equity crowdfunding, where companies are raising capital in exchange for a share of their company. And then you have peer-to-peer lending, which is more of a kind of debt-based application. And then at the top, you have really sort of online securities marketplaces where, for example, in the US, you can go onto an online funding platform and raise up to $50 million, including from unaccredited investors, thanks to new regulations. So these are sort of serious amounts of money. One of the Australian sites called Possible is now estimating that 3 out of 10 of all of its successful fundraisers are coming from the IoT sector, with a big connection to the Chinese market. So IoT is certainly making some moves in crowdfunding and doing quite well out of it.
Rabih, if I could turn to you, how did you come across this business model when you were sitting around and looking at things to do? I'm sure you evaluated many different ways of approaching this, but you settled on your approach. How did that come about?
Sure. So we've been in the business of software platform as a group for more than 10 years, more than a decade. And when all the IoT, I mean, you can call it hype if you want, but when all the buzz coming around IoT started emerging 2-3 years ago, sorry, before getting into that, the embedded market, before it started being called IoT, it was called embedded.
Okay. So
the embedded market was one of our targets, but it was not as exciting as today, you know, the industrial. So once all the buzz started around IoT, we looked at whether we would have an opportunity spinning off a product that is based on our technology that can get us growth in the IoT space. And we worked our network, we talked to some previous partners and talked to some potential customers, etc. And then quickly we saw that we have a place. We have a place in the IoT software, let's say, the IoT cloud software today is composed of boxes, and we figured that there's a missing box or a box that hasn't been, the offering is not as solid as it could be, where we could be, where we could have an opportunity. And we decided to launch Scripter.io, which is our IoT product.
Let's talk about business models. I forget who it was yesterday was talking about for the IoT, and it was one of the big American technology providers. And they said they're basically doing work on a no-win, no-fee basis. And the product solution that they had, they claimed would reduce energy consumption in a building. And the sales pitch was, we can cut your energy bill and your water bill by 20% in your building. And it's like, fine. But what they've figured out with something like that is that people will not pay up front for that on the promise of this saving. What they will do, though, is a kind of revenue sharing split. They will say, okay, you build it, and if we save 20 or even 25%, you get half of that, we get half of it. Everybody goes home happy, or some kind of split like that. And he said that he thinks for the Internet of Things, for a lot of these technologies, that kind of speculative revenue sharing or benefit sharing model might be a way forward. What's your experience?
Well, I don't know if I can formulate a general opinion about how like the winning business model and how things are going to go. I'm sure in consumer it's going to be one thing. This is an ROI based approach.
Yeah.
So maybe consumers are not going to be willing to they don't see the saving at the get go, and then they would accept something that where they would, as you describe it. But let's say from our side, we're a cloud service, so we're on demand by definition. We don't do revenue sharing, but we provide our customers with an easy way to start. It costs almost it's almost free, let's say. I mean, they still have to invest in understanding the platform and and forming developers to use it, etc., integrating it. But then it's on demand. The more they use it, the more they pay. They don't have to make enormous investments to start benefiting from it.
What about your experience, Paul, in charging upfront for a service or charging in arrears for a service, as opposed to a genuine partnership where you take on some of the risk of the project alongside your client?
I think the sort of ideal business model in some ways is the sort of pay per use kind of model. I think that if we could all sort of sit down and everything was equal, then we would say that we want to make money when our customers make money, and that's something that sits very well both with us and with the customers. I mean, one reason why that's difficult in many sectors is because of the kind of capital requirements or the type of projects that go into delivering a product or a service. So, for example, in our case, when we were helping our customers create these sort of crowdfunding, peer-to-peer lending platforms, in the early days we had to spend a lot of time kind of hand-holding and using our resources to help our customers kind of put these sites together. And that meant that we had to have a team available and operational to help our customers, and then we had to cover the costs of that. So we had to have some sort of upfront element to our business model, and that, going through that process allowed us to sort of adjust the product so that it was more like a kind of plug and play type application. It was more of a pure sort of API system where our customers could come and just take the product and build on it themselves without coming to us first. And that has now allowed us to go with more of a kind of usage model, just a sort of transactional model. But I think business models don't have to be set in stone at the very beginning. I think it's very possible to start with one business model, to give yourself the time and the opportunity to develop the product or service that you're using, and the opportunity to discover how customers really want to use your product and consume your service. And then once you get to that stage and you have that kind of product market fit, then you can develop it into that more that kind of comfortable usage model, I think, which is a good thing to aim for.
Now, let's get some ideas from the floor. Comments or questions or other insights on business models. We're looking, aren't we, at innovation, investment as well. Anyone got any thoughts or ideas on investment opportunities when it comes to the Internet of Things? Anything you've tried, anything you've seen, or anything you'd like to challenge our speakers on? We've got a couple of minutes to take some comments or questions or some ideas. Have a think about that, and I'll come back to you in a second. But Rabih, if I can turn to you, a lot of these things tend to happen around hubs where there's a buzz. There's a buzz in Dubai at the moment. There's maybe a buzz in Jordan within this region when it comes to the internet. And a lot of your work is in Beirut. Is there that buzz there?
Yeah, so Beirut might not have the market, but it has a developed developer community and entrepreneurial community. So that is shifting slowly towards more IoT ideas. And given that we have a platform that can power IoT projects, I'm making an official announcement here. We're creating a sort of accelerator for IoT inside our company.
Okay, great.
Yeah, so we want to see the younger generation.
And what will you provide? Funding, advice, real estate, bit of tech?
So funding, we have a partnership with MEVP and other VCs in Lebanon for funding. We provide something more valuable. We provide the connections to the United States market, to Silicon Valley. We're also moving to, we're creating an office in Palo Alto by the end of the summer. So we provide that. We provide mentorship, and we provide expertise in the stuff that we know, just back ends for IoT, and through our connections to other companies, and we have quite large partners, so we know what they're looking for. We kind of know what works, and we can advise the young entrepreneurs and the ideas they're doing. So we're looking to host 3 to 4 new ideas every 6 months for now. Yeah.
Great.
Yeah.
We look forward to following that progress. I'll take 1 or 2 ideas or comments or questions. Yes, please. Thank you, sir. Gentleman towards my far left. There's a microphone coming to you now. Thanks very much indeed.
Hi. Just recently on a Kickstarter, Chip raised just over $2 million for a $9 fully contained Linux running machine. The cost of hardware, the cost of sensors has been extensively driven down by such a project. What would the next steps be to leverage those type of cost-effective platforms to get into the open market by making the software that actually drives these IoT devices more acceptable? Does it call for open standards? Does it call for more investment? What does it call for?
Well, what I'm answering is an answer. It's not the answer to your question, but at least in this event, what we've been hearing for 2 days is that there are going to be 30 billion connected devices in so many years, or 50 billion, and it's going to be cool. And we keep hearing innovation, creativity, innovation. People still don't know what to do. So this company managed to reduce the cost for the basic building block for an IoT something to $7. Fantastic. But I still think it's like the internet in 95 or 94, you know. It happened 6 years after, 5 years. We still don't know exactly what are the cool things, and we keep repeating the same use cases. Thermostat at home, safety, thermostat at home, safety, or industrial, etc. So,
Paul.
I think, one of the things that I sort of read into this is that the kind of fundraising community is working at the early stages for IoT. So all of the success stories are in that first category I talked about earlier, this kind of rewards donation style. And the promise of sort of online securities markets is that you will have a much greater transparency and efficiency of capital raising, even at the much larger sizes of funding. So we can see examples of these sorts of companies, especially sort of consumer IoT companies, that are able to raise, some serious amounts of money. You mentioned $2 million. There have been others at 5, 10. But then, where is the finance infrastructure at the next level above that, and how do we start putting that together? So I'm interested in seeing how the investor community and the kind of funds and other groups who understand and see the opportunity in IoT to be able to get together and support this ecosystem beyond just that first stage of funding.
Gents, we're out of time. We're going to have to leave it there. Fascinating insights. Thank you very much indeed for sharing with us. Paul Higgins, first of all, thanks very much indeed. Cheers, Paul, and also Rabih Nassar. Thank you for your time. Thank you.